All right, let's go ahead and get started. Guys. Chart Talk, episode 32. What it do?
Woo!
So today's a special one. Let me get things situated. But today's a special one. This is something that you guys want to make sure you're tapped into. And if you haven't already, drop a like, subscribe. You know what to do. You know why we out here. So, thank you guys. I'm gonna go ahead.
Thank you. Yes, we are about to get into something. It's gonna be fun. Like I said on the Telegram, if you're not following us on Telegram, you can go follow us on there as well. But we're gonna do this every single Wednesday, where we're gonna start going over some educational stuff, and I think this is a perfect way to start it off, going into one of the best books on psychology.
Because you might even call this Wisdom Wednesday. You might call it that.
I like that.
Yeah,
But ultimately, I really think that there is just so many different ways of reading the market. There's so many different ways of trading. Every person is so different, but there is a specific psychology that you need to understand at the bare minimum if you want to be a consistently profitable trader. So, this book, it helps. I'll tell you all that 100%. It helps. I can speak on that through experience. AB,
personal experience, absolutely.
So many times. And just before we start, I remember it was 2017 and maybe 2018, but it was probably closer to the end of 2017, and I just stopped my landscaping company. Me and one of my best friends started a landscaping company, and he had a baby and kids and wife and all this stuff, and we had to split our company up, and I'm working by myself, and I'm mowing lawns by myself. Part of landscaping, you gotta maintain people's lawns, right? And so I didn't have a crew or anything at the time. It was like right when we just split off, and I was learning how to trade at that same exact time. And I remember having this book, and it was like, you don't know what to listen to or what to do at all when you're a beginner, but someone told me about this book, and so I remember listening to this book before I even knew anything about anything, and it didn't even make sense whenever I was listening to it, but I would listen to it just on repeat, mowing lawns. And I'll tell you, I've listened to this book 20 times probably, and I still get something new out of it every single time I listen to it. No lie. And
I've probably listened to it 3 times now.
And you probably get the same thing, right?
It's just goated.
It's just such a good book. It is. So we're going to talk about it through more of like our perspective, trading in like these markets right now, and how things are maybe a little different or maybe exactly the same from what it was when he wrote this book a couple decades ago at this point now. Mark Douglas is he was born, I think, in like the 50s or 40s, but he became he was a successful insurance agent, and he was, like a lot of people who try to trade, he was already successful, and he thought the transition to trading was going to be kind of easy, and he found out that he couldn't keep a job and trade. So he was like, you know what? This isn't easy as I thought it was going to be. I'm going to just go ahead, move to Chicago, and work for a broker. And he said within 9 months, he lost all of his money. And so he was like,
realistic,
okay,
by the way.
This is the preface of the book. And so we're going into chapter 1, but he talks about this in the preface.
And that's just already it's just a realistic situation. So much that a lot of people don't even care to admit.
yeah, this type of stuff happens to so many people, and so it's cool. This dude took the time, ended up, it was like 12 something years he spent with so many traders and so many different professional prop firms and all this stuff, and ended up writing this book. So let's get into it.
Right.
All right, so here's at the very beginning, he speaks about the, fundamental, technical, or mental analysis. Okay, and what this means is, traders either look at fundamental data, or the technical traders either look at the charts, right? And these people will spend years and years trying to figure out different strategies or different websites with different market analysts and all these things. But a lot of people, they do not even check their own self. I know so many times I've seen on like YouTube comments or something, people will be like, yeah, trading doesn't work, it's too blah blah blah, it's blah blah blah, and they'll always blame someone else. But what Mark is saying here is that, yeah, fundamental analysis kind of was where everything started, and he even was saying how the technicals didn't even come into play until the late 80s.
Yep.
Can you believe that, bro?
That actually blew my mind, because after he goes on to say that is like, now is like, it's kind of, even now it's unheard of if you're not a technical analysis nowadays.
Yeah, exactly. And they thought it was some hocus pocus, he says.
Yeah,
he said they thought it was hocus pocus. How crazy. And then once these technical analysts, they started more or less proving that the big money, more or less, the big money traders have specific behavioral patterns, and these behavioral patterns are observable on the charts. And the fundamental analysts didn't even freaking look at charts like that. They looked at like the news, PMI, and the news, and they'll look at the weather, and they'll look at all this other, the moon and all this other stuff, but they didn't necessarily look at price charts. And then once technical analysts came into the mix and started showing how the probabilities more or less came into the mix, and they started getting a lot better results, that's when people were like, okay, we need to consider technicals. But he then starts to talk about what happens when you know all the fundamentals and you know all the technicals, but you're still not consistent. What then, right?
Yep.
You have to you have to have a mental analysis at that point, and that's being able to analyze your psychology, and the specific things that he talks about in the book that you need to do for yourself to be able to become a trader. Because if you have a system and the Fed is hawkish, all this blah 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 fundamental stuff, but you're still not consistent, you don't need to go learn another technical strategy, is what he's saying. And I can tell you that as well. You need to kind of figure out what's going on with you, and there's certain things that he talks about in here. So let's go to the next slide, AB.
Okay.
And just for y'all to know, we're both technical traders, but it's we both know our psychology very well, also on the flip side. So
yeah,
and it's a constant, you got to constantly be checking yourself, right? AB, I got a question for you real quick. How many years do you think it took you to do a true like mental analysis, or even realize like, okay, I need to do a mental analysis? Everyone's different with this answer, by
Um,
the way, guys.
to be quite honest, I felt like I started that thought process 2 years in, but truly it didn't happen until last year.
Okay, very cool.
And
Very, very cool.
even up to today, I'm still finding out there's certain things that I'm about my mental.
Yeah, I feel
So
that
this is
100%.
something that is not gonna just go away. You
Right,
know, that's how I
exactly.
look at it, at least.
And to like piggyback on that, just me and you knowing each other for so long and being like brothers, we know that like even certain things in your life, like life is gonna happen.
Oh
You know what
yeah.
I'm saying? Like just because you learned how to trade and you have a great strategy and you go to the gym every day and you have a great mentality, guess what? Life is still gonna happen,
Life is.
and you're still going to have to deal with things, and those outside factors in life, they play a role in your psychology, in your trading, regardless if you think they do or not, they do. And so it's always really important to know your psychology and have that mental analysis. I'll say for myself, you know, I came into the market kind of with not a chip on my shoulder, but it was like almost everything I have tried doing, I've been a little bit better than average at. And besides like drawing, I'm not that good at drawing, but I guess it's been more of like athletic things really.
Mm,
And more than, because I just I guess that's just how it's been for me more than anything, just trying athletic things, and I've kind of excelled at it. But then you know, having that same mindset going into the market, I thought like, well, I was good at basketball, I was good at baseball, I was good at soccer, I was good at football, so you know, I was okay in school. I wasn't, you know, I didn't fail, so I'll probably do okay. I'll probably be really good at trading. And so I went into that with the mindset. And so the whole time, instead of me being like, okay, what am I doing wrong? I really had the mindset of like, okay, the Elliott wave pattern, okay, that doesn't show up much. What's the next? Oh, ICT. Oh, he has a ton of info. Let me go look at all of his info. Okay, I learned all that. Let's try to implement it. It's not working for me very well. Okay, let's go and learn divergence, blah blah blah. Okay, I learned that. And so what I did, instead of kind of doing more of like a psychological check, is I went and learned it all as fast as I could, thinking that the market, and he talks about, he like calls me out in this chapter, talks about how like that's not what you're supposed to do. But that's what I did, and it took me, and I did it fast though, so there is a little bit of difference there. I ran through courses, I ran through books, I ran through out 10 hours a day on things. So what took some people, you know, a month to do in a course, I would do it in like 3 days. So it was just a lot for me, and it took me a while to realize like, yo, you can keep learning, but there's nothing that's going to teach you until you start learning about this. So that's when I started meditating. And he doesn't talk about meditation much in the book, I don't think at all, but that's one thing that I can kind of maybe suggest to some other people.
yeah, no,
That
I
like,
definitely suggest meditating. Meditating is definitely
yeah,
something that Peyton brought up to me, even, and I didn't even think that I could meditate. And funny enough, meditation has helped me a lot, not even just with trading, but just in life in general. Like,
right,
there's a lot of times where it's like, yo, meditation, if from being high to being low, and just there's this quote that I even heard from my meditation app that I listen to when I meditate, right? And she had said that, you know, meditating is about being okay in the chaos, like being calm within the chaos or something like that. And I was like, dang, that's real right there. Like, that's some
it
real
is.
stuff, you know. And that's
It's
just that's kind of what it is like to be a trader as well, being calm within the chaos, because
very
there's a
true.
lot of emotions that come within trading, you know. So
Yep. Very good. I like that, being calm within the chaos, because that's I've said it before, but what I love to visualize when I'm meditating, if I don't have like a guided meditation or something that's telling me, because I highly suggest that as well.
Oh yeah, I need that.
Guided,
I need
meditative. Don't try to sit there by yourself for 5, 10, 30 minutes. That ain't gonna work. But eventually you kind of sometimes do want to just sit by yourself.
Oh yeah, for sure.
And what I think about to try to clear my mind is I go into the tallest building in the city and I sit there and I watch the traffic. And I think of the traffic as like everything that's going on in my life. And there's nothing I can do up at the very top of this building in the city. Right, I just have to observe, kind of, and I can hear all the noises. I can hear the fast cars. I can hear the honking. I can see a wreck, but I can't do nothing about that noise. It's they have a loud car, and it is what it is. So you just kind of have to like be able to block out noise sometimes, block out the chaos in your life, calm in the chaos. It's really good. That's really good. Let's go on to this next right here, which is comparing the differences in traders. So he talks about the differences in traders and how different consistent and emotional traders are. So he compares them to the sun and the moon, night and day. He says how the moon seems like it's so close you could just touch it, but in reality, not many people have ever been to the moon, if they ever have, and that's another story. But and that's kind of like the same for traders, right? Anyone can put on a trade, but very few can be consistent, and they are as different as night and day. So that analogy there, night and day, I really like that, because and I like the analogy of how he says like the moon is so close it seems like you could touch it. And like being a trader, when you first get in the scene, you put that first trade on and it hits TP, and it's like you literally feel like you just uncracked the code to
literally literal. Oh my, that is such an understatement, bro. The moment I placed my first trade, I made money off of this, bro. Oh, I romanticized trading so hardcore. I romanticized it so hardcore.
And what happens is they get this mindset that is just like not real. And then once they continue down the road, it doesn't compound into the correct thinking process. And they don't really actually get to the moon, right? They feel like they can touch it. You see it every day, you know. The markets are open every day. You have these opportunities every day. You can place a trade every day, but are you really a consistent winner? Probably not. Probably an emotional trader, and that is okay. It's what everyone is always learning. I don't think these books are made to tell you like you are this and you are that. It's a learning book, right? There's not one trader out there who is everything this 100%. It just eventually every human turns into a human again. It is okay. But what the consistent winners do, no matter what kind of pressure they feel, they don't crack 150% like an emotional trader will. An emotional trader will have their stop loss 2 pips away from getting hit, and they'll just be like, it's probably gonna get hit, I'm just gonna close. But then the market turns right around and you're like, wow, why did I close? And then you enter again, and then it goes and hits your stop loss. That's what emotional traders do. A consistent winner right there. He placed the trade and he has specific rules. Okay, with this strategy, I waited for the trade. I assessed my risk. I have my stop loss. There it is. Boom. My stop loss gets hit. Okay.
It is what it is. Whatever happens, happens.
Whatever happens, happens. Exactly. I go to the next trade. But, and guys, we've all been there with the emotional trader. We've all
Every
been there.
single professional trader.
It really takes time, I think, more than anything, to get past that that kind of feeling of having so much emotion. I'm not saying that it goes away, because it definitely doesn't. Because the thing about it, it's funny, you start to once you get more confident, you scale up your account, right? Well, then your money just starts getting bigger and bigger, and regardless of what anyone tells you, your emotion comes with that, right? You were trading $100, now you're trading $1,000. That's a little bit different. They've already done studies about what money does to psychology, and regardless of if you feel it or not, it messes with your brain. It basically takes away your frontal lobe, is what in your front, forget the exact whatever, but the front part of your brain is the logic part of your brain. It does logic and reasoning, and that's when you're able to just, you kind of can get in a zone right here. If you're an athlete, you know exactly what I'm talking about. But then when money comes into the picture, your front stops working as much, and other parts of your brain start working, and guilt and fear and greed and all this other stuff start working, and that's when you get emotional and do other things, right? And so he says, I put this first on the consistent winner side, but the best traders think differently from the rest. He said, to sum it up, the best traders think differently from the rest. And that's kind of vague, but it's, if you just kind of sit back and say it like twice, like I just did, it makes sense, right? And for us, we've got to mentor people. We've got to see communities and different communities as well. We've been in the game for a while, so we've seen a lot of different styles even come and go in this game. And you kind of just see how people think. And you know that majority of the people aren't winning. So if everyone's thinking a certain way, you just got to think a little bit differently, right?
Definitely got to think differently. Cause
when did you start to see that it was like, oh, okay, so like, when did you start to get that contrarian type feel? Because it's something that takes time as well. You can't just come into the market and know that everyone's bearish and you're going to be bullish now.
But I could honestly
when
say,
do you think that
I
happened?
could honestly say
you?
that I think that I'm blessed and it happened early for me. I think it has started happening to me like when I was in my first year in trading, like after my first year. That's when I started.
Natural contrarian.
Yeah, because I think it's because I'm like already like just the way how I think about in life in general. I already think differently than others, you know. So I think that very much helped with that.
Do you think being in crypto, being in that not first pump, I guess you got to get into XRP after that first pump, right?
Mm-hmm.
Do you think that has anything to do with it? Because you got to see the FOMO.
Yep, absolutely.
And you didn't really participate in it, did you?
Nah.
Until it came way down. Right.
Bro, the first time I bought XRP was like at 20 something cents.
So yeah, that's and it's interesting because he talks about it a lot more later in the book, but he talks about how what you believe and what you like you, I guess, what it's he says believe, appear, and perceive, or something like that. It's later on in this chapter, I believe, but that's interesting because it happened to you. Now you actually believe it, you know what I'm saying? And then it perceives your thoughts that way too. So it's just very cool how that works.
I think I know what you're talking about. I just don't know the exact way how he said it.
He says it a little later in the chapter. I got it here. And here's on the emotional trader, thinks because they are intelligent, they will be successful. That was like me.
You don't have to.
Right
you
off
don't
the
have
jump.
to have a high. Even if you have a huge high Q, that's not gonna make any difference trading in the market.
It's not gonna make you a better trader at all. In fact, it might make you worse. I'm not even kidding. It really might hinder you a little bit if you are a very smart person. If you are very successful, if you're a very young, successful person as well, you have a chip on your shoulder, trading is gonna probably whoop you at first.
Humble you.
And yeah, it really will. In the book it says that it literally says the biggest group of consistent losers consist of doctors, lawyers, scientists, CEOs, entrepreneurs, and wealthy retirees.
Sounds about right.
So if you are in any of those groups, you know, and trading has been hard for you, it has nothing else other to do with your psychology, and it is what it is. It says knows you will win some and lose some. It is all about the statistical edge. So consistent winners know that it's just an edge all the time. You're gonna win, you're gonna lose, so don't trip about it. Don't trip when you lose some. Don't go crazy when you win, because then you'll start getting greedy. The emotional trader has a fear of being wrong, and just all the time. I would say if any of my characteristics for the emotional side in trading, that is what I don't like to be wrong, more or less in life than trading even. I don't like to be wrong. I don't know a lot of people who like to be wrong, actually.
I think I've grown to be okay with being wrong.
And that's mature, you know what I'm saying?
I think that started I think that has everything to do with basketball though, because of like, you know, the whole. I think that Kobe mentality is what helped me with being okay being wrong, because I always remember he used to say that if you shot 20 times and you missed 20 shots, then that tells me that you stopped shooting at 20.
Ooh.
You know what I'm saying? He's like, why not keep going? Why not keep pushing past your limits and stuff like that? And that's what I'd always remember playing basketball. And that's kind of, I think, what helped me be okay with being wrong a lot. Like, just in life. Because I feel like once I got my mid-20s, and then after that, I was pretty okay with being wrong. Now, it might hurt a little bit, but I'll be okay with being wrong.
That's good stuff.
You know?
I like that. My thing, I think, in trading is I got so good at analyzing, and because I learned so many different, you know, ways, honestly, and then I learned the way, you know, then I learned the Wyckoff method, but it was like I was able to add so many like things into that arsenal, and so now when I analyze the market, right, I just have all this like in my backpack, and it's like I feel like the US military and I'm going to war, and it's like I cannot lose. I have so much ammo.
He said you got that thing on you.
I got that thing on me and that thing on me. And it's just like, but in reality, it doesn't matter. It straight up doesn't matter because the market has the market can do anything it wants, and it has a non-zero sum game. What does it say? He says something like, basically it means that anything can happen at any time, and the statistics are only in your edge. That's it. That's the only thing you can really control.
Because these markets are not controlled by anybody except for human emotion. That's it.
Exactly.
Daily thing. These markets are not controlled by a single individual or controlled by a single group of people. No, it's controlled by people's emotions.
Exactly. And whenever the people with a lot of money can sense that there are certain emotions in the market, they are going to take full advantage of every drip of that emotion that is out there. And people can call it manipulation, or they can call it whatever they want, but these people have been doing the same patterns over and over and over again, reaping on people's emotions, basically.
Facts.
Consistent winners 100% accept the risk, therefore they are not afraid of losing money, while emotional traders are just straight up afraid of losing their money, like all the time.
This was my issue.
Yeah.
I think this one was my issue. Like, I'm not saying that I'm a risk taker, right? But I also know that, if I lose this money, then I ain't got nothing after this. So,
right. So there's that little piece in the back of your mind saying like, yeah, I'm gonna take this trade, but like, if I lose this trade,
I'm gonna be extra hot. Exactly.
Yeah. And so having that little bit of just I guess it would be like that fear of.
Oh no, it's definitely fear
for sure. He goes over the four different factors, which is really good. But and like I said, every trader has a little bit of something on this right side. And we are consistent winners. Yeah. This is proven fact. It's just been proven fact for a couple years now.
Yeah. We're talking about when we were like the
we've had one bad month in 14, so it is what it is. But the last thing it says on the consistent winner side: developed attitudes that give them the greatest degree of mental flexibility to flow in and out of trades based on what the market is telling them about the possibilities, and it's about the possibilities from its perspective. That right there, when he said that, I wrote it all down straight, word for word. So
I mean, just talk about this morning, dude, with freaking with US 30, the second time we try to buy it,
the second time we tried to buy it?
No, like the second trade, when we were trying to buy it. The second time.
We didn't.
Talk about it though, because we were going to, but then.
Yeah. Oh well, we did.
The mental flexibility.
Yeah. So like, yeah. So we have a strategy where if it breaks a certain level at a certain time of day, we're looking for the market to run into the next level of volume, and like it technically broke it, but like the way it broke, it didn't
do what we wanted.
It just didn't do 100% what we wanted to do. And AB was like, it broke. And it's like a strategy that I'm working on with him, but it's like, it's kind of my strategy, but not even really at this point. It's both of our strategy. But like, he was like, are we in right here? And I didn't respond right away. So he just entered because it was like a 50-50, like it broke. But then I looked at it.
It's just the volume wasn't there. The candlestick, the way how it broke, it wasn't the best either.
And like, I don't know, I just have this like, it's like I don't want to say I have this crazy intuition in the market, because AB has it too, but it's like sometimes at certain times it's like I know it. It's like the intuition is there. It's the flow is what it is. It's the flexibility to flow in and out of trades based on it. And it wasn't anything, it was other than based on what the market is telling me about probabilities. And we just traded that. You have to back test to be able to do this. You cannot just think you can do this. You have to back test a ton, and you have to be true to your back testing, and then you have to do it in the live markets, and you need to call it out loud, and you need to say it, and because if you want true intuition in the market, it is not going to just come to you. And if you've been trading for 2 years, you do not have intuition in the market. I'm sorry. You just don't
Question.
yet.
I'm not sure if he talk about the difference in, I don't think he talks about in this book the difference in simulated trading versus live trading, and like I don't think he talks too much about that in this book, does he?
I'm not sure. He might later on.
I'm not sure. He might talk about it later, but I'm gonna leave it. I'm gonna leave it at that for now. I'll ask you this question later, and we can talk about it at a different time, because I don't think he does talk about this, but we'll talk about it later. It's an interesting topic, though. It's an interesting topic.
Definitely. Last thing on emotional traders is they hold or add to losing trades because they can't accept the loss, or they get greedy and say if it turns here, I'll even make more. So
that's another issue I had. Oh my Lord!
Stop loss is about to get hit. They're gonna remove the stop loss and let it go a little bit more, or they will. Stop loss is about to get hit. They believe in the trade so much that they're gonna add
facts
halfway down
the
stop loss.
That's the one.
And they're gonna say, well, if it goes up from here, then I'm gonna make way more, and then it drops a little bit more, and they add a little bit more again, and yada yada yada. That we've all done that.
That's me. That was me right there.
And then in the same breath, the second it turns into a winner, you see some profits.
I'm getting
and you're
called
like,
out.
I'm out of here.
I'm getting called out so hard.
So that's what a lot of traders go through.
That was, I'm getting called out.
And it is he calls everyone out in this book. It's amazing. I love it. Go to the next slide. All right. He calls, once you break this painful time in your life, he calls this the threshold of consistency. Right? And this is beyond the threshold of consistency. So I wrote, traders who make it beyond the threshold of consistency usually suffer a great deal of emotional and financial struggle before they create the attitudes that allow them to function correctly in the market. And so that's what it is. It's beliefs, attitudes, and perception. And those were the three things that I was looking for. But because your beliefs create your attitudes, and your attitude and your beliefs create your perception. Mm-hmm. But once you make it past this time that is just like you are trying to figure things out, not only are you trying to figure it out emotionally, but like you're blowing money. Like you have probably blown all of your savings, and you might have even got a loan out. I'm talking, we have heard stories,
man,
that I'm
like, oh my Lord, you really did that? I don't know
how people do this. I don't know how they do this, but yeah, and guess what? It literally happens to almost, now maybe not on the craziest degree, right? There's
not
always
the craziest
a crazy
stories
degree.
We've heard,
but like people go through losing, money that they might not have should have lost at the time, right?
Or they might should have had no business in using.
Right, because emotions get high when you first start to trade, and you hit a couple, maybe you hit 5 winning trades in a row, and you really think, oh man, if I blah 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 blah, and your mind just starts going with numbers on, well, if I would have done that with 10,000, then I would have made this much, and then I would have had enough to live off of for this many months, and then blah 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 blah, and all of that is just emotional damage.
Emotional damage,
Big time. Like,
it really is.
That's just not. You don't need to think like that. And
romanticizing is the worst thing that you can do, because when you romanticize something, you put expectations on it. When you put expectations on it and the expectations don't get met, you feel like you've been betrayed. You feel like you've romanticized something, and then you thought that you deserved it, and it wasn't given to you, and now you feel like you feel dumb. You looking dumb over there.
Yep.
Like,
Exactly.
and it's crazy. Like, and it's so crazy how trading shows you about life as well, because that's the same thing in life, right? Like, just for anything and anyone.
And once you start to understand, and this, I don't know how this might come off, but once you start to understand the trading psychology more, because it's a constant learning process, once you start to learn it more, you really do understand life a little bit more. You understand other people a little bit more.
Mm-hmm.
You understand businesses a little bit more. You understand like the trends of the world a little bit more.
You understand marketing really a little more even.
You're not just learning about a chart. It's very, very interesting and very cool. But it is kind of getting past that struggle of, dang, I just lost all my money. And if you want to get good at anything, unless you are just God-given, very 0.0001% of people are LeBron James, right? Everyone else in the NBA has a completely different story, right?
Mm-hmm.
Where they had to work their butt off, even though they all have God-given abilities as well. They still had to work their butts off to get there. So did LeBron, don't get me wrong, but he could have picked any sport probably.
He's different,
is what I'm talking about.
He's different.
So yeah, and so it does take that, and then the emotional part, I want to talk about that. If you are in a relationship with someone, or maybe you're super young, even, because I started this when I was like 24. So I guess that is super young for a lot of people, but I'm talking about like these kids out here are like 17, 18 years old. Yo, it's gonna take a toll on your mental. I couldn't imagine learning this at 18 years old. But I'll tell you what, it is better that you learn it now than when you're older. But for I would say for people who are married, AB, what kind of maybe emotional roller coasters can they look forward to? How could they not necessarily, because it's gonna happen, you know what I'm saying? You can't like prevent someone from struggling, but maybe what are some tips that you could give some people, maybe? And then I'll give mine for maybe you just have a girlfriend or something.
For married folks, I would definitely say good tips on handling your emotions, like whether you're in a trade or whether you're in the markets or anything like that. Don't take the angers that you're feeling from the market and go and put it on your significant other. Let them know how you feel, for sure. Let them know how you feeling about, like, oh, it's a bad trading day, or the markets aren't doing what you want them to do and stuff like that. Let them know so that they can understand that you're upset and you feel in a type of way, for sure. Like, that's one of the best things that you can do, because that's gonna prevent a whole lot. Because if you go and blow up on them on something else and they have no idea why you're mad, then it's gonna leave them in a confused situation.
Mm-hmm.
Like, that's one of my top tips that I have, for sure. What's
That's
one of
good.
yours? I want to hear one of yours.
I would say, kind of basically piggybacking off of that, but don't tell them everything though. So like, you don't have to share with them any dollar amount
at all.
You don't have to share with them how the trade almost it barely stopped you out this much, and that's why you lost $900. You don't need to tell them that you caught 400 pips. They don't care about that, number one. And if they do care, they're only going to care in the wrong way. The good things, they're first of all, they're girls. It's like telling them a video game, guys. They don't care about what happened on your game. Now, they don't care that you have a 15 kill streak.
This man's spitting.
They don't care at all. But if you were to tell them, I had a 15 kill streak, and then I jumped up and I landed on my ankle and I rolled my ankle, or I jumped and the controller fell and it broke. Guess what? Now your girl is gonna go, and you just brought an emotion into her life now, and now she's gonna care, and you're gonna go, well, you in your head, because you're a guy and you're logical, you're gonna go, she didn't care about when I hit TP, but then when I said something negative, now because that's what girls are, they're emotional. So do not talk to them about the markets.
Just tell them you're having a bad trading day, or you had a good trading day.
Hey, today was not the best day in the market. And okay, and then you as a man need to shrug it off as well, because you need to be less emotional in these markets.
If you're a female watching this, same thing applies to you, girl. Same thing.
Yeah, and I don't mean to be like that, because definitely there's way more females coming into the game, which I respect so heavily, because they have a just completely different way. They're very good at rules until their emotions.
And you know what's crazy? I don't even think they'd be offended. I think they'd be like, nah, that's some real ass shit. Because
I'm obviously not trying to offend anyone, but
the
majority of traders are men, so it just is what it is. And
absolutely.
I think because my
our
girlfriend tried to trade as
demographic
well.
is like 85% people watching are men, so even that.
Well, my girlfriend tried to trade as well back in the day, and at one point she was like almost doing better than me. But it's just a very emotional game, right? And women they either like crave over emotion, or they don't want any emotion at all, and that wasn't for her. Last thing right here, consistency or lack of consistency comes from your attitude. Winners have a unique set of attitudes that allow them to remain disciplined, focused, and confident in spite of adverse conditions. And this removes the fear. So that's what the consistent winners do. They have this attitude, and they follow their rules. They are on time, they're at their desk, they're focused, and they know their setups, they're confident, and it doesn't as long as everything's lined up, they're good. There can be news, if it's part of their setup, they don't care. They're a 1 minute trader. It might seem fast to you, not to them, because they're confident. And so that's what you got to be. You got to be disciplined, focused, and confident. Go to the next slide. There we go. Perfect. This is an interesting part right here. Accepting the risk. It says just because you're taking a trade and it is risky doesn't mean you have fully accepted the risk. Most traders don't really accept Most traders don't really accept that trading has a non-guaranteed probable outcome. They most likely haven't accepted the possible consequences. So
I don't
he
think
talks.
this part right here. I don't think I started doing it until 2.5 years in.
Yeah, this part is like you think you understand risk to reward, and you think you understand all this stuff, but really, you truly understanding that there is a non-guaranteed probable outcome is the key to this right here. And that literally you have to really understand that when you are taking out $20,000 out of your savings account, that money can really disappear. Like, I don't think people have truly accepted the possible consequence when they start to trade. They do not accept it. It's like they don't accept that that's possible. And you gotta accept that. And the best traders have the skill of acceptance. That's literally, he says that in the book. I didn't write that. He said that. They fully accept the risk that they are taking without any hesitation. The risk inherent in trading do not bother the best traders. So trading, if you don't like risk, trading is going to be hard for you. So luckily, I grew up playing poker, and I grew up freaking gambling basketball shots on the court, or else I don't even think I would like trading, because
I love that.
I really don't. But I grew up with this like risky type, gambly type. I did it for so many years, and it just, when I found trading, it was like a little outlet or whatever. And then I grew into a real 5-year funded trader or whatever. But I don't think a lot of people really grasp that trading is a risky business. It is inherent risk is inside of this business. And a lot of people, they try to find the way out of that.
I think that people do understand that they don't truly, I think that people know about the risk, but they're, like you said, they don't truly understand it. I think that's what it is. They're like, oh yeah, there's risk involved in trading, but they don't truly understand what that risk is, or the risk inside the risk.
Exactly. That's exactly what he's referring to. That risk inside the risk, more or less, for lack of better words. Yeah. Exactly. Every trade has an uncertain outcome, and the best traders have accepted this. You have to accept the facts, guys, that this is a risky market. You're not gonna win every trade, and until you fully just kind of let go and accept that risk, you're going to be searching for like a 90% win rate strategy, or like a risk to reward of 1 to 20. And you're going to get caught up with the dumbest setups. You're going to get caught up waiting, and so accepting that risk is huge.
Definitely huge. Okay.
All right, and then he calls these right here the 4 primary trading fears. And your fears will act against you and cause the very thing you are afraid of to actually happen. So that is like the scary part of this whole psychology. I forgot
what that law was called. The law, whatever you think. Whatever you think the worst is
attraction.
No, not the. Well, it's kind of like the law of attraction, but it's not. It's like whatever can go wrong will go wrong, or something like that.
Oh yeah, that's some shit. That's like a proverb type shit.
Yeah, or I forgot who said it. It's like a special quote from somebody. I forgot, but that's like exactly what this is.
And so he says, when you're fearful, your perception's blocked. So it's like when you are in a trade and it's about to hit your stop loss, and you're like, ah, dang, I'm about to lose this money, dang. And then and you're like, you say something like, if it goes back to my entry, I'm gonna get out. And it goes back to your entry, but you don't get out because the fear came in on you because you thought you were gonna lose, and then the fear came back that you think you're gonna miss out. And so what happens is, it says in the book that fear immobilizes people, and it will make you just not even do anything. You won't be able to think straight. You won't be able to do nothing because of fear. And once the trade is over, he says, right? Once the trade ends up going and stops you out, or once you get out of the trade for no reason, or because you just got scared or something, and then it goes 100 pips your way, not until the trade is over, or whatever the event is, say it was just news, perfect setup, news came, hits your entry, you get an alert, you look at it, it gives you 5 wicks off your entry, and you still didn't get into the trade. Why? Because of news, a fearful event. You were scared. But after news, trade goes your way. Boom. Dang. It says only till the event is over will you be able to see what happened.
So I have a question for you. With that being said, do you think that the flight or fight response in human beings is totally a crutch when it comes to trading? Or what degree do you think that it's negative to traders?
Meaning that, like, whenever that fight or flight instinct goes off in you, do you think that's good or bad?
Do you think it's positive or negative? And to
I think it's negative, because whenever I start to feel emotion, period, any emotion, is when I know I'm being messed with. You know what I'm saying? And once you start to feel that feeling that you have to fight or flight, you are out of here. You're already getting emotionally taken advantage of in the market, and you're probably going to make an emotional decision versus if you're just following a system. Now,
versus you're cool, calm, and collected.
Because most people, when they get to fight or flight, they are not Kobe Bryant. Now, Kobe Bryant in fight or flight, that's a different question, right? He would probably say something like, give me the ball. But this is not basketball. That is the thing. Kobe would probably hate trading until he learned it. Because I just think once you have a market where there is emotion, it is easy to manipulate it. I think. What do you think about that?
No, that's fire what you said. I agree with you. I do think that's one instinct that is definitely negative until you can turn it into a positive, aka instincts and intuition type of thing, you know, right. Because it gets to a point of when you become such an excellent trader that because I mean it's just like how you said that you have intuition. You only get intuition by looking at the market and seeing what the market has done in the past. That's when you can make these decisions that somebody who doesn't know what the market looks like is making, right? So
right,
there's times where you're gonna have that fight as in, and this is how I look at it, like fight as in that, oh no, I'm gonna stay in the trade, or the flight as in, no, I'm gonna get out early because I don't like how it's looking. And that intuition at those times, they can be helpful. But as a beginner trader, I feel like it's more of I'm not obnoxiousness, but it's not, what's the word I'm looking for? Dang, I literally used it the other day. Pretentious. It's pretentious. I think that's when it starts to get pretentious in a trader when they're beginning versus when they become like really like you said, when you start to be able to put it in a systematic way, and then you just have your intuition, and you know that your intuition is based off of your rules type of thing. You know, so that's how I feel about it.
That's good. Fear of being wrong, fear of losing money, fear of missing out, and leaving money on the table. Basically, fear of being wrong will cause people not to trade as much. Fear of losing money will cause people to not trade as much as well.
Or overtrade.
Fear of missing out really causes people to overtrade, over leverage.
Yep.
And then leaving money on the table. This one is whenever you kind of take a trade and you get out too early, and then you leave money on the table, or you are seeing a trade that has the potential to go far, and you don't want to get out yet, so you have this fear of leaving money on the table. Or maybe the market doesn't look very good, and you need to trade because you have a goal to hit, or you have
that's another one to talk about.
A prop firm challenge to hit, or you just need to pay your bills.
I can't wait to talk about that in the future. I can't wait to talk about that.
You're afraid to leave money on the table because if the market moves, it moves without you. You're kind of afraid to leave money on the table, and you don't want to. It's also kind of fear of missing out on that as well. But those are the main four things of fear. If you can get the fear of being wrong out of your head, fear of losing money, the fear of missing out, and the fear of leaving money on the table out of your head, you're good. Like, you won't have these thoughts, these fearful ideas in your head that make you think a certain way, because that's all it is the way you're believing, and then your attitude, and then your perception. You go to the next one. I think that's it. So right here, this is what he says is like learning how to swing a golf club is to golf as this is to trading. So it's just one of the most important things right here is truly understanding that what you believe affects how you act, and that determines what you see and really how you trade. In other words, what you kind of believe about money, or what you believe about how smart you are or whatever, gives you a certain attitude, and that attitude is going to give you a result.
Facts.
And so if you can start to think like a real consistent trader and stop believing that the market makers are coming to get your stop loss. Stop believing in that stuff. Stop believing that even though it's true, you have to believe that you are going to beat the odds that only 95% of traders fail. You have to believe that you are the 5%, because that's going to give you an attitude and that's gonna give you results, a perception. It's gonna determine what you see in your bank account. So you have to get these old ideas, and I'm sure he's about to go off and he goes off in the book on all these different beliefs. He talks about how, you know, the girl who, or the father who got bit by the snake, you know, he's scared of snakes, and so
I can't wait.
Has that belief of snakes, and then his daughter comes around snakes and she don't have no
fear at all,
perception of fear, nothing at all, and so her perception is way different than his perception, right? So I'm sure he breaks beliefs down, attitudes down, perceptions down. It's going to be good.
This is good. This is a good book, guys. This is a good.
You can go to the next slide. I think that is it.
This is the last one.
Yep. All right. So that was it, y'all. That was chapter 1 of Trading in the Zone, and then our kind of, you know, podcast take on it. I hope, you know, some young trader or some prodigy out there gets to listen to this, and they get to take this in, and like you're learning from like almost 10 years of experience plus a real OG in the book. So it's kind of like you're getting to learn what he's telling y'all, and then we're giving you the remix. Man, I really hope we're helping we're helping some young traders out here.
Absolutely,
at the bare minimum.
guys. So this is it for Shark Talk for tonight. Tomorrow we will be back at it, 8 p.m. Central Standard Time. And again, of course, drop a like if you've gained some value. Subscribe to the channel, because you might have forgotten. You might have forgotten that you're not subscribed. So go ahead and drop a subscribe